Let's go through all of today's Tesla stock news, and I'll start with this interesting remark from Elon Musk himself. It was in response to this post that said, "I can't see too well. Can you help me find the competition? All of these other companies are not selling nowhere near as many EVs in the US as Tesla does." And I think Elon is speaking about some Tesla stock investors here. Sometimes they question if I should even run Tesla. My response is simply, which CEO on that list that you just saw would you prefer? I say any one of these guys is fine, but definitely none of these guys here. It appears that Elon certainly wants to stay as the CEO of Tesla, and I really like that. If he stepped down, I would not be happy with that. I think Tesla overall would still be okay, but it wouldn't do as well, and certainly I would not expect Tesla to build the Optimus bot in the future, at least not widely successfully. But with Elon, I think it's an actual possibility. ARK Invest just sold a little bit more Tesla stock, nowhere near as much as the last two times just now. And their allocation now is at 10.8% in their main fund. I think the unspoken rule is anytime Tesla stock goes over 11% in this fund, the sales are then made. So with under 11% in the fund now, I would expect the sales to slow down or not happen until we go over 11% again. Yesterday, I reported on the first V4 supercharger being installed in the US, and now here's the second one. So things are moving forward, which is good. But it has been a long time since I mentioned by how much longer the cable is. 50% longer. You know, one reason why V4 superchargers are very important is because Tesla is opening up its charging network to everyone, and this, for example, vehicle is taking 2 spots because the cable is not long enough. So it is actually really good to see V4 finally rolling out. Also with V4, some vehicles should be able to charge the battery a little bit faster, which could be significant for the Cybertruck. What's also good about V4 superchargers is that they share the same anchor points as V3 for relatively easy upgrade path. Look at number 4 here from Gary. As FSD reaches level 4 and Teslas can drive themselves, our FSD take rate of 12% could prove too low, and the FSD improvement will help sell more Teslas. I haven't really heard much from Gary in terms of him possibly being too conservative about FSD. I have heard things like Gary being right about FSD and him pointing that out, that FSD is not solved and he was right to not be bullish about it before, but now you're hearing a slightly different tune. He also continues here, frankly, given these catalysts, we don't understand why Tesla felt compelled to cut Model 3 and why configurator prices last night. The good news is the price cuts were US only and replaced inventory discounts that may have been just as high. I think it is much better to have lower configurator prices and no inventory discounts than to have bigger inventory discounts, because to see inventory discounts, you have to already have sort of made up your mind, okay, I want a Tesla. But before you buy a Tesla, you look at the configurator price and you look at that and you go, oh, maybe that's a bit pricey. And then if you decide to actually buy it, maybe you will check out the inventory and then you'll go, oh, actually, it's not as much as I thought. For example, I have one of my friends that was looking at Tesla recently, and she just looked at the configurator price and she didn't even know that there were inventory discounts. Gary also updated his estimates. This is his old estimate from July 14th, and before he expected in 2030, the only thing I really care about is 2030 and really 2033, which is what I base my Tesla valuation model. I base everything basically on 2033, and I have one more year, basically 5 years from now, that I also base my valuation on for those of you who want to see what I'm thinking about Tesla stock more short term. But really, I look as far into the future as I can with relatively strong confidence. So I think I can be very confident about 2033 numbers. And Gary has 10.2 million deliveries for 2030. Remember, this is from July. And $24 for earnings per share. And here is his most recent updated model, and you can see that deliveries are now a little bit lower for next year. They are now 2.5 1.55 million. But what remains unchanged is the delivery number for 2030. It is still at 10.22 million. However, he's projecting that Tesla will now only make $22 instead of $24 per share in 2030. There are a few items where I am actually less bullish than Gary looking at this chart, and there are quite a few more items where I'm quite a bit more bullish than Gary. You may see my full valuation model on Patreon by clicking on the link below. James just posted his Q3 income statement forecast. He's expecting 15.8% for the auto margin, and his EPS is 65 cents. Here's his more detailed forecast. The consensus EPS is now at 71 cents, so James is below the consensus. With my own companies, I look at my balances and statements weekly and in many cases even daily. I never want to be surprised, ever. With my businesses, I'm just focused on the long term really, but I still look at the statements, and I do the same with Tesla as well. Someone attacked Gary by saying Tesla stock is down because Gary says price cuts are bad. Well, actually, Tesla stock yesterday went up just a tiny little bit, but that's because the markets are up. If the markets were not up, my guess is Tesla stock would have dropped maybe 3 to 4%. Usually it moves just a little bit more than this index. The refresh Model 3 was just unveiled in France, and many people seem to be quite excited by it. Well, I would be excited too if they had an unveiling here. Tesla did not cut prices in Canada, they just did it in the US. But Gary also agrees with me that price cuts will apply to Canada as well. Jeff made some points here, but I do have a different take on some of those. He says price cuts are getting smaller and less frequent. Also, they are more regional and not as global as before. But I would like to push against the non-global part a little bit. We don't exactly know that Tesla is not planning to cut prices further in Europe or China. Because if you look back to January, we had price cuts on January 13th in the US, but in China, the price cuts happened a week earlier. So likely Jeff is going to be right about this, but I would not have any strong conclusions until waiting for another week or two. Number two, the new Model Y rear-wheel drive trim was not cut and should be a bulk of new order volumes, taking volume away from the other two. But I think most likely Tesla decided to cut prices before the rear-wheel drive Model Y was even released. Number three here, Model 3 was a smaller $1,250 cut in the US only, and probably to clear out the inventory for the refresh Model 3. But then why did they cut the Model Y as well? If they did not cut the Model Y, I would agree with that point. Because they cut the Model Y, I don't agree with that point. And Gary agrees with me on this. We don't know if Tesla US Model Y cuts will spread to other markets. We also don't know if Tesla will add inventory discounts to clear excess volumes toward quarter end. Yeah, personally, if I was to buy a Tesla vehicle, unless I was in a rush to buy, I would buy it at the end of the quarter. Bank of America had a few words about Tesla's price cuts. In addition to the demand signals, price changes on the Model 3 and Y are poised to further weigh on Tesla's gross margins. However, while the impact was quite meaningful in Q1 and Q2, the impact of price changes for Q3 should be relatively modest. We got sales numbers from the UK, and my first impression looking at this is, well, this quarter was so much more better than our previous quarter, but this last quarter was actually the best quarter so far this year. And if you look at this chart, it becomes apparent that Tesla is doing pretty well this year in the UK, because so far this year we are clearly ahead of the previous year, and usually the last quarter in the year is where the UK does the best. However, this year could be a little bit different because the refresh Model 3 will not be delivered in the UK until next year. That is because in the UK they drive on the other side of the road. Troy just updated his expectations for Giga Mexico. He says, based on the latest news, the permits for Giga Mexico will be issued soon. That means the permitting stage will take 5 months longer than other factories. Therefore, Giga Mexico is expected to take 1 month longer than Giga Berlin and should be ready in August 2025. He expects groundwork to begin on October 26th. It appears to me that NotATeslaApp.com thinks that the delivery event date for the Cybertruck will be announced on October 18th on the earnings call. Joe Tagmeyer says that here we can probably see sections of Cybertrucks also for scrap in addition to the Model Y bodies. Of course, that is not really unexpected. In early production, you always have issues with these castings, so that's nothing bad really. But if we do see a lot of it, that would not be a great sign. I don't think there's anything to worry about right now. Drive Tesla Canada writes that it looks like Tesla has kept the same door open mechanism in these Cybertrucks compared to earlier builds. Here's some footage from Cyber Rodeo, and you can see that Elon pushes a button first and only then he opens the door. I slowed down the video, and this is actually an important part for me personally, because my friend owns a Model X and it's a pain. So see here, he definitely pressed the button and only then the door opens. But look at this guy here. Here it is at normal speed. I don't know if he pressed anything. It almost seemed like he just sort of opened it. And now I slowed it down even more. So he put his hands, nothing's happening. Okay, I know. He pressed the button first, I think, and only then the door opened. My friend has a Model X, and every time before getting into that car, I press the door button and only then it opens, and there's always a delay. Maybe 9 out of 10 times I'm slightly annoyed getting into that car because I press on the door and the door either doesn't open or there's a delay and I think it's not opening, but it's actually opening. So see this handle? Nothing comes out of there. Basically, you just have to push it in a little bit, and it's not, you don't have that feedback where you know, okay, yeah, I definitely pressed it. There's no feedback really. I mean, the door handle, it goes in a little bit, but you just never know, did I actually press it this time, or is this just a delay? And if that was just the case for the rear doors, I would be okay with that, because it does take a little bit of time for them to go up, so it's actually a bit slow to get in the vehicle. But it's also the same thing for this passenger door as well, which is really the annoying part. Now, if you're the driver, this is not important at all, because when you approach the vehicle, the door just opens for you, which I really like about the Model X, actually. But as a passenger, I'm always a bit annoyed. But luckily with the Cybertruck, it seems that it is very clear once he presses the button that he actually pressed the button. That's the most annoying part. So they seem to have solved the most annoying part of the problem here. There is still a delay after pressing the button. The door does not open immediately, which is slightly annoying, but that's not really the bad part. So I think we're good here. James commented on Tesla's recent price cuts. He says if Elon is right and hardware is just being pushed at any respectable positive gross margin, because Tesla expects to convert a large number of these cars into buyers of FSD in the future, then the strategy makes sense. The issue with this strategy is it adds a lot of risk because FSD isn't a given. Now, I think in the long term, it is a given, but the question is, when will it be solved? Warren asks James, what is your estimate of the probability that FSD is solved within 5 years? James says, I think there's a very high probability it will be grade level 2, meaning you still have to pay attention, but the car basically does all of the driving. In 5 years, it may be good enough that everyone will want to use it as a level 2 system all the time. This would be very valuable, and I think almost no one really is pricing that in. Probability of level 5 approved with regulators for autonomous driving is very low, he says. I mean, I wouldn't bet on it happening, but I also happen to be conservative, so maybe that's just me, says James. This argument is also pretty common among Tesla bears. No issue with regulation is mind-numbing. Yes, regulation is going to be an issue in wide adoption for full self-driving. There are thousands of jurisdictions, yet Tesla still can't sell in 50 states after years of litigation. James responds by saying Tesla won't need all jurisdictions to approve FSD before the market reacts positively. They just need it to work as intended. The rest will fall into place. The consumer will not wait for the bureaucrats, and neither will Tesla. The value will be created quickly. A good way to think about it is, imagine that tomorrow Tesla builds this huge backlog suddenly, immediately. Let's say 6 months of backlog just comes back immediately. Do you think the stock would react to that immediately, or do you think the stock would react only once Tesla reports bigger deliveries than before? What you would see in the news is Tesla has so much demand, too much demand, speculations about Tesla increasing prices, increased margins, increased earnings, Wall Street increasing price target estimates. So I think the stock would actually go up immediately. James says that FSD and robotaxi will be harder to solve than building a profitable EV company from scratch, which Tesla has already done. Optimus, the way it has been positioned, will be harder to solve than solving FSD for cars. These are two moonshots. It's okay to believe these will happen, but in my opinion, says James, these are very high risk, high reward projects. I think there's also an argument to be made and a debate to be had about, well, if you want to solve full self-driving, it needs to be basically perfect. It needs to be safer than human driving. But for Optimus Robot, it can fall, it can make mistakes, and no one will die. So to have some limited use for the bot, in theory, maybe it would be a little bit easier. But in practice, it seems to me that Tesla wants this bot to be a bot that can be used for almost anything and not for some just limited use. So assuming that is true, then I agree with James. James expands on his point by saying, I think Optimus will be harder because Tesla needs to figure out both the hardware and the software. Getting the hardware right and functional is a Herculean task all by itself. At least they solved the hardware in the cars. Very true. We have millions of Tesla cars on the roads already. How many bots do we have out there? This is just a rumor, so this may not happen. But it appears that perhaps Tesla may give FSD beta to some of its Chinese customers this quarter. Maybe, maybe not. Just a rumor, but if true, this would be good news. It should, by at least a little bit, increase the take rate of FSD beta in China if people can actually start using it. There's an update on the $7,500 US EV tax credit. There's a new update starting from January 1st, which will basically allow you to use the $7,500 EV tax credit as a down payment instead of having to wait until the next year to claim that tax credit. Consumers will need to attest they meet income limits to qualify for the tax credit, or they will need to repay the government when filing their taxes. So I guess they could maybe get a bit of a loan from the government here if you don't meet the requirements. SpaceX received an investment from Italy's largest bank. When Elon visited Italy this summer, he seemed pretty happy. Also, the Prime Minister of Italy seemed to be really happy to see him. I wonder if that's at all connected. Not that it matters, but I'm just curious. Getting back to the $7,500 tax credit, there seems to perhaps be a bit of a problem maybe, because it mentions the word dealership. Now, as we know, Tesla doesn't exactly have dealerships. Tesla has delivery centers and service centers. So will Tesla really be able to take advantage of that $7,500 credit going forward? Currently, the consensus appears to be yes, Tesla will be able to take advantage of it. Gary certainly seems to think that it will be applied to all Tesla vehicles and that Tesla will benefit from this new change. I swear, when I saw this, I thought this was fake, that this was photoshopped. Eat the rich? But no, this is very, very real. That seems a bit excessive, maybe? I mean, imagine if one political party said, eat the other political party. Here's another big mistake I see Tesla investors make, and this one, I learned the hard way. That video is exclusively available on Patreon. If you are a Patreon supporter of mine, make sure to watch that one. By joining my Patreon, you will get access to how much I think it is fair to pay per Tesla share each year between 2023 and 2033. If you sign up for the investor tier of support, you will also get my valuation model of Tesla stock with a 45-minute video walkthrough. And YouTube says you should watch this video next, but if you haven't finished watching that discussion about the future with Elon Musk, watch this one first. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.